Your credit score just got a major overhaul in 2026. And if you don't adapt, you could lose 20 points overnight. FICO doubled mortgage credit score pricing. The average FICO score dipped to 714, and lenders are rapidly adopting FICO 10T and VantageScore 4.0. This isn't just an update, it's the biggest shift in credit scoring in a decade, and most people are completely unprepared. Welcome back to Credit Unlocked. If you've checked your credit score recently and noticed it dropped, you are not imagining things. In 2026, both FICO and VantageScore rolled out their most significant updates in years. While articles like Cal Barton's 6 major credit score changes in 2026 cover the basics, they don't tell you what to actually do about it. Today, I'm giving you the 5 actionable steps you must take right now to protect your score. Change number 1. FICO 10T and VantageScore 4.0 are now being used by most major lenders. What does this mean for you? These new models look at 24 months of credit history instead of just 6. They're also much more sensitive to recent behavior, meaning one late payment today hurts more than it did last year. Change number 2. Mortgage credit score pricing has doubled. Lenders are now charging around $10 per credit score pull for mortgage applications, up from about $5. This might not sound like much, but it means lenders are being more selective. They're pulling scores less frequently and looking for stronger applicants. Change number 30. The average FICO score has dipped to 714. Yes, you heard that right. After years of climbing, the national average dropped by 3 points. Why? Because the new models are penalizing certain behaviors more harshly, particularly high credit utilization and medical debt. So what do you do about it? Step 1. Check your new score immediately. Don't rely on your old FICO 8 score. You need to see your FICO 10T or VantageScore 4.0 score. Most free credit monitoring services are now showing these new scores. This is your baseline. Step 2. Adjust your credit utilization strategy. Under the new models, keeping your balances below 30% of your limit isn't enough anymore. For optimal scores, you need to aim for under 10% and pay down balances before the statement closing date, not just the due date. Step 3. Handle medical debt differently. Both new models treat paid medical collections more favorably, but here's the key. You need to make sure the collection agency reports it as paid in full to the credit bureaus. Don't just pay it and assume it's handled. Follow up with written confirmation. Step 4. If you rent, make sure your payments are being reported. VantageScore 4.0 includes rental payment history, which can help you if you're thin file or rebuilding. Services like RentTrack or reporting through your property manager can add positive payment history. Step 5. Avoid this 20-point mistake. Under FICO 10T, opening multiple new credit accounts in a short period hurts more than ever. If you're planning to apply for a mortgage or auto loan in 2026, do not open new credit cards within 6 months of your application. This one error could drop your score by 20 points or more. Here's the bottom line. The 2026 credit score changes reward consistency and punish volatility. Lenders want to see stable, responsible behavior over 2 years, not just recent good months. If you adapt these 5 steps, you'll not only protect your score, you might actually see it improve under the new system. So what's your experience been? Have you checked your new FICO 10T or VantageScore 4.0 score yet? Did it go up or down? Let me know in the comments below. And if you found this helpful, hit that like button and subscribe for more 2026 credit strategies.